Back, it's June 8th, 2026, and if you thought the tech rally was officially dead after Friday's absolute bloodbath, think again. Wall Street just pulled off a U-turn today, but one tech giant completely missed the memo and sold off hard during its biggest event of the year. We have a massive week of data ahead that could change everything, so let's talk about what just happened, what's breaking, how we're trading it. So quick disclaimer, this is not financial advice, this is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and of course hit likes, leave comments, all of that stuff. I really appreciate everybody's support. So that helps me continue to make these videos. So if you haven't subscribed yet, please do. So since I made a video earlier today and one on Sunday night, I just want to do a quicker review, but let's look through the indices to start off with. So QQQ was the outperformer on the indices, up 1.56%. SPY a little bit less, so almost flat, but up 23 basis points. And essentially this was up a little more than it appears, because in after hours on Friday, it continued to sell off a little bit more. There's just a little bit of continuation to the downside. So the bounce is a little bit better than it appears to be, but still underperforming the Qs. The Dow was underperforming it even more, down 0.15%, and it also got there in not a great fashion, and meaning it popped up a little bit in the morning and came on down. And in fact, if we actually look at that for, and I will get into this a bit more. In after hours, the SPY is continuing some downward pressure there. Not incredibly surprising, and we will get into the outlook for these, but I just wanted to cover how they actually did today. Like I said, the Dow was down. IWM was up. It was at 0.87, I believe. Okay, yeah. And then also let's look at TLT quickly while we're here, because on Friday it was selling off. It wasn't selling off as hard as I expected based on the headlines and what everybody was saying the reason for the sell-off was. It just did not make sense that TLT wasn't down as much. But today we had a little bit of a sell-off halfway through the day with no news, and now we're starting to bounce a little bit. So I think there's a bit of positioning going on in here. And so it's something that I'm watching very closely, especially as I'm pretty long on TLT in a number of different accounts. But we can talk into that. But in general, today we essentially saw some classic dip buying after Friday's sharp jobs report driven sell-off. Not to be, was to be expected to some degree. Let me bring this back to the hourly so we don't get, or the daily, so we don't get caught up in what is happening currently as opposed to what happened today. So let's look at some specific sectors. Looking at the sectors today, it was all about semiconductors and technology staging a relief rally. So if we look at SMH, that was just quite a massive move, up 5% on the day. Now, granted, we're still, depending on how you trade, we haven't really changed the trend from Friday. I saw the trend as being broken, and or at least initial stages of it. I would need a little more confirmation to call it broken or changed on my specific viewpoint. But that being said, today didn't actually change much from a trend perspective on the daily. But it did have a great bounce at 5%. Also, XLK, if we're going to look at the technology ETF, was similarly bounced 2.15%, which is no surprise then that the QQQ was up 1.5% while the SPY was just up 0.23%. But if we look at XLE, for example, to look at energy, it was, prices have been easing slightly with crude. And in fact, if we also go to the crude chart here, I think I had it up. Yep. There was this big reversal. And it was interesting about that because over the weekend, we had some flare-ups in the Iran conflict, and yet oil price, if you're an oil bull, it wasn't looking very good for you. In fact, if we just put this to the daily here, this is not what you'd necessarily be expecting when the war is flaring up again. So, those were the main sectors that I wanted to look at. I don't want to go through every sector today, but if you want, please leave a comment. I will answer every comment. I always do. And then certain consumer discretionary names were down, faced a little bit of friction today. The actual indice on its own wasn't down that much. It was actually up, but again, not considering the drops we've been having. But individual names were down a bit in consumer discretionary, especially as that fresh New York Fed data that we got showed consumers are starting to feel a real pinch regarding their personal finances, which is interesting because I've been watching a lot of staples. So now let's go into some of the biggest stock stories of the day. So Apple, oh my. we got flushed out actually on this, holding a lot of shares, so down heavy on the day for this. But we're closing all positions on this. There could be some swing trades as the actual daily trend hasn't changed, but this is not the kind of candle you want to see a look above and fail with a massive rejection, then breaking the 20 on the daily. It's not great, although we are coming back into a previous breakout point. So, do what you will with this name, but I'm no longer interested in at the moment for upside potential. However, I will say that this happens all the time with the WWDC. So today was Apple's Worldwide Developers Conference, and shares dropped almost 2%. It was 1.89 to close around $301. And so investors were highly anticipating the big reveal of Apple Intelligence and an AI-powered overhaul to Siri. While we got exactly that, the market treated it like a classic sell the news event. There simply wasn't enough immediate wow factor to keep the pre-conference momentum going. And the stock gave back some ground on heavy volume. And like I said, this is relatively consistent with a lot of WWDCs. So not a big surprise there. So hopefully nobody was going along today. But again, not financial advice, but that's not what I was doing. So the other big story was MRVL. I mean, up 9.63% today. And, a lot of people are talking about how much this has run, but there's been no damage done to the chart here, except that I will say the way that all of these mega parabolic rallies end is when volatility enters the conversation like this. And sometimes they just consolidate. Sometimes they pull back hard. Sometimes they pull back hard, then consolidate. I mean, all you have to do is look at gold from last year and just see how that played out. But again, that's not a prototype. I'm just saying that volatility has officially entered here, and take what you will from that. But what was the catalyst? It was for today for jumping up 10%. It wasn't just a bounce, although maybe it is. Who knows how the news comes out, why it comes out, when it comes out. Sometimes it feels like people are watching the charts, but essentially the news broke that the chip maker is officially being added to the S&P 500 at the end of June. So that's kind of a big story there. People need to, and when I say people, fund managers need to front run that and add it. And specifically people who are managing different indices and funds that are based on the S&P 500 or have something to do with it, meaning they're using it as a metric or they're mirroring it, or it's the benchmark. So when a stock gets added to the S&P, it's just a lot of massive indexes who are forced to buy it up. And Wall Street was front running that today, meaning they're doing it before it actually gets added. So let's go one more story. So Lilly, it's next gen obesity win. So Eli Lilly finally caught a bid today. It was, not huge, but it did break above this, this previous resistance that we were looking at. A lot of times it's not uncommon for it to come back in. So I'm not just going YOLO on this, but it caught a nice bid today. And it was because they released stellar trial results for the next generation obesity drug. And so that stock pushed higher as Lilly continues to assert its dominance in the weight loss market. And now let's talk about some trade ideas and a portfolio check-in. I'm not going to do a big, long, full portfolio check-in, but we were talking about specific trades over the weekend, and one of those was Conagra, which had a great day, up 1%, which is really great here because it's reclaiming a really important level. If you had been watching this, the $13 level was relatively important for a number of, if you can see, even as far back as last month or a month and a half ago, that was a very important level. And it's been an important level even based on volatility, meaning there's been positioning there for options. So sometimes it's not just like where's the support and resistance based on where price has been coming, but you can watch these levels looking at other metrics. And so this is a name I had mentioned over the weekend. All the same goes for Clorox, which had a really great day, also up 1%, which is really great on a name like this. And so what's interesting is with consumer confidence showing signs of strains, as I was talking about when I was talking about discretionaries, the defensive consumer staples are acting exactly how we'd want to, providing a stable, steady anchor, while tech plays are a bit more volatile at the moment. So I like these. I actually had gotten into calls early in the day on the dip when we came down and touched this pivot point here. We could do a video on that because I really love trading those, and that's actually how I get into any kind of intraday option situation. But I closed out relatively because the upper target on the GEX is at 100 for me, and I closed out of these calls. If it comes back down in, I have an order set to enter if we pull back, and that's essentially the way that I do that. If we look at this here. I calculate what the delta is, and it's 47. The delta is 47. And so that means for every dollar it moves, the price of this option will change by $47. And so I've calculated that I want to get back in when this hits $7.80, which would represent a pullback of about $2.50. And at that point, let's go back to Clorox. There, $2.50 will take me back down from where we closed at 95 to 92.5, which, as you see, was this pivot point again for today. I may go lower depending on what happens on the after hours. So, 15 minutes before open, I tend to place some of these call options. And the thing about them is that call options right at the open have some real insane pricing discrepancies. The bid-ask spread is gigantic usually. Sometimes it's inflated. IV is a little bit crazier in those first 15 minutes. So oftentimes I will be putting these a lot lower and then using Active Trader to push the value that I'm willing to pay, push the price on my limit order up until I get filled. So we can do a video on that. I could show some live trading if you'd like. Just please leave a comment below and let me know. And so the next thing I want to talk about is Now. So ServiceNow is, I'm tracking it closely. We've talked about it a lot in different videos, and it's one I'm tracking very closely along with that broader software AI recovery. So not just looking at that name, but also looking at IGV, Microsoft, which was down today, unfortunately, but it's starting to base. So I'm either going to see one last flush, I would assume, or maybe we're starting to get enough institutions positioning and that there'll be some news dropping, which would be really great. But who knows? So yeah, that's what I've been watching. I think that Now is much better off than some of the other names. And I also like that the president has mentioned that he's holding a lot of this stock. I think that bodes well for a lot of news to come out about it. And also the pattern on it is wonderful. This is the exact kind of thing where I would want to get in for some longer term shares. Some call options for convexity, and some cash secured puts to get in at even lower prices and drive my cost basis down. Microsoft we talked about in a separate video, so if you haven't seen that, please watch that. It ended up being pinned very close to where I said at 410. We're back down to 410 in the after hour, but we ended at 411.74. But there's some good stuff coming on this, particularly as it has been holding levels very well. There has been flushing for sure, but this is not the kind of name that I'm playing just for intraday scalps. So guys, now let's get to the weather report. So somebody asked me in the comments, my last video on Sunday, if I'm optimistic on the markets in the near future. And when I think about the near future, I think about the daily, or I think about maybe the weekly at most. I don't tend to think about the monthly or yearly. Although we all have different time frames. But so let's look at the daily here. And, my response to their question was, I'm more optimistic about individual names than the indexes. Essentially, the thinking is, I do think we can go higher, but that's not the question. The question really is the juice worth the squeeze at this level? And my assumption is that we might consolidate for a while or drop a bit further, albeit with some pops along the way. And I do like to think about the year in general, even when I'm thinking about this like near-term question, because I've been mapping out the entire year since the start of the year using expected moves. And we talked about that in Sunday's video, so go back and get those expected moves for the year. But essentially, I do see a high probability that we come back down and revisit 715, 714, even down to 700, based on the scale of this move. So that wouldn't be odd to me to see that happening. And right now, the probability of that happening is greater than the probability of us going above the all-time high here. So that's what I think to myself. Am I willing to lever up or to play the momentum just to get back to 760 and or to get back above it? And so today was that bounce we were talking about that we saw a high probability for, specifically based on the VIX, because yesterday the VIX had a 39%, Friday, the VIX had a 39% up day, which meant that there was like a 90% or 95% chance of an up day in the SPY in the next 2 trading days. And we had that day today. So for me, I don't actually know the statistics about what that means for tomorrow, but it's not looking great here. And then I also think about, okay, we had that bounce day, right? But how strong was that bounce? That bounce barely took back any of that candle. If you're playing QQQ, it had a greater bounce. But I don't actually think that technology is going to go on a run without the rest of the market because it already did that. And I think I'm starting to see some rotation into some more stable names again, like the fact that some like Conagra was up 1% today tells me that something is starting to shift a little bit. But we've seen that. In fact, you could still see my RSI divergence. So in the near term, my answer is that I'm not playing the indices, and in fact, I tend to not play the indices in general for anything more than hedging and scalping. I'm more interested in individual names in the day trading quantitative portfolio. But I do have other portfolios. Someday I can go through all the different portfolios, so let me know if you would like that. I think that could be compelling for you. But a lot of times when I'm talking to you all, I'm assuming that you have a long-term holding portfolio where you're buying stocks at good prices that you want to be holding for a long time, and that you have a portfolio that might be more of a trading portfolio. And so the portfolio I'm talking about right now is in the trading portfolio. And as I said, I'm a quantitative trader here. So it's based largely on levels and flows and statistics, but it's a lot of algorithmic trading that are discovering these trades for me. And then using discretion to sort through those. So maybe a quantamental, if you will. But we try to limit the discretion, except in so much as which models we're using at the moment. But even that's informed by something else, which I can show you guys next time, which is a regime detection, which I think is very interesting. And my regime detection is saying we still are bullish on the longer term, the medium term. It's hard to do super near term. So a question like the viewer asked is hard to answer, but the way that I try to answer it best is how do I think about the last few days here and what that means for the next few days? And for me, I wouldn't know until we get some clarity on this candle right here. So the candle on Friday had huge volume. It was a significant change of character. It wiped out about 2 weeks worth of moves in a single day because the 2 weeks ago opened here. And I believe we actually closed below that today at 739. So that does mean something to me. We may be coming back down a little bit lower. So that's about all I can say in the near term, because I don't think about the indices more than that. However, I think there's some wonderful opportunities once you have volatility here. So some of the names I was talking about are very interesting for that, particularly even if you think about Ethereum. That had a better bounce today, and so did Bitcoin. Let's look at IBIT. Than the SPY did. It was up 5%. You may have noticed how Bitcoin was going down when SPY was going up previously. And now that seems to have shifted after they both fell in tandem on Friday. But yeah, so that's kind of my overall outlook on the market for the moment. That being said, there's a lot of economic data to watch for this week. Make no mistake, today was like calm. Okay. Friday was intense. Today was not nearly as intense unless you were in some individual names like Apple that had crazy days, had a crazy day, but the macro calendar is absolutely loaded this week. And the data coming out over the next few days will dictate the next 500 points, I think, on the S&P. So it's going to tell us which way we're going to go. And I think you need to wait for all of these days to happen, Wednesday, Thursday, or Friday, because as I mentioned in yesterday's video, they tend to have the opposite effect Wednesday and Thursday, and then Friday's tends to be a continuation or a trending day. So on Wednesday, we get the CPI, the big one, the consumer price index, inflation data. And this will give us a clear look on whether inflation is cooling or staying sticky. And that is a lot of what the conversation is about at the moment. And then Thursday, we get PPI, the producer price index, which gives us a little bit more insight into the wholesale side of inflation, along with the weekly jobless claims. And then Friday, and like I said, those two numbers, Wednesday and Thursday, tend to affect the market in opposite ways. So if Wednesday goes down, Thursday's numbers tend to make it go up, and vice versa. It's not a hard and fast rule. It's an observation. So all it means is just another data point there. If you're day trading those economic events, you probably don't need this analysis. You're trading specific levels and volume profile and candle chart patterns. So that's probably a different thing. But be careful on those days. Again, not financial advice, but I'm going to be light on those days and see how it plays out, and then reposition, as most of the institutions are doing on those days. And then, yeah, just to recap real quick, if you found this video, this market breakdown, this post-market breakdown valuable, please smash the like button, hit subscribe, and turn on notifications if you could. That really helps so you don't miss a daily update. And, drop a comment below. Are you liking this tech bounce? Do you think Apple's drop is a warning sign? How do you feel about some of the software recovery names? And of course, if there's anything you'd like to see me cover, anything I suggested during the video or anything that I didn't that you'd like, please leave a comment. Thanks so much for subscribing. I really appreciate it.